And welcome to The Trade. Let's get you caught up what traders are watching out there today. Hezbollah firing rockets at Israel's third largest city, Haifa, while Israel looks poised to expand its offensive into Lebanon 1 year after the attack on Israel from Hamas that sparked the Gaza war. Oil prices settled more than 3% higher in response, Brent surpassing $80 a barrel for the first time since August, as we see the increased risk of a region-wide Middle East war jolting investors out of record bearish positions that they amassed last month. Copper prices coming under pressure from a firm dollar, but there is optimism about improving demand in the top consumer, China, which has provided support ahead of a briefing on the country's policies to promote economic growth. And gold prices easing as the US dollar holds strong, and recent employment data prompts investors to scale back expectations of a big rate cut from the Fed next month. Let's get into all the technicals now. Peter McGuire from XM joining me now, and you're looking at the S&P 500. I mean, it's been on this record run, but a little bit of a pullback, or a 1% pullback overnight, Peter.
Well, good morning, Juliette. Yeah, it was. I mean, it had a big week, and when you're looking at the volatility last week, it was fairly sizable. And then Friday, we saw a move to the upside, and you saw that better than expected non-farm payrolls that really impacted. And I suppose it's probably washed a little bit out of the market in the sense of where we're going with a rate cut perspective. You've got less. This time last week, Juliette, we were looking at about a 50% probability of 50 basis points. Now you're looking at sub 9%. So it's really crunched down. And naturally, that impact to equity markets. You've got so many of the different indicators trading sideways. And I'm looking at the likes of, stochastic oscillators still trading inside the overbought territory, but it could be preparing for a downbeat move. So that's where things are trading at the moment. And, you're looking across the whole fabric of technicals. The market's very, very toppy at the moment, and it could be a time for, a little bit of profit taking.
Okay, so potentially profit taking there. When it comes to the overall currency market, though, a little bit of mixed movement against the dollar overnight, but we've got so much going on, the risk premium in the Middle East of war, China, of course, as well, and I could go on. But what are you seeing in terms of where the dollar is tracking?
Well, when you're looking at it, to sum it up, and just a quick summary, where you've seen that in the sense of the better than expected ISM PMIs were strong, and then you've had naturally that strong non-farm payroll I made reference to, and also August was revised upward to 159,000. To sum it up, the dollar index experiencing a notable positive rally, still not enough change for a broader picture to bullishness, but it's still been very sizable moves, as noticed on the chart there, and you're now at around about 102.5 for that US dollar index, Juliette. So that's a very strong move. Resistance you could see, around that 103.30. We'll just have to see if it's got the momentum to get there, but at the present time, it's onward and upward for King Dollar.
Onward and upward for King Dollar. What does that mean for the Aussie dollar, which was tracking, I guess, towards those 70 US cent levels, but it's hit a bit of a speed bump?
Absolutely, yeah. So as everything revolves around that economic data coming out, and you're right, you're on the money there, Juliette, because it seems to have lost the momentum. It's probably going to be a 67.5 trade. It's very volatile and great for traders, but that US dollar, with a war premium building in, you've got also, as you mentioned, energy prices, gold still, and the possibility of even 25 basis points only going to be the cut for the Fed by the end of the year. We've gone from 75 and it was baked in. You're going to see 50 basis points on November 7. Now you've got less than a 9% chance of that happening, and possibly even washing that out to that's the only cut. So there's a lot of big themes going to contribute to I suppose, the overall consensus as far as US dollar and what that does to the Aussie peso.
Okay, and now we're looking ahead to the RBNZ decision tomorrow, Peter. What are you seeing in terms of potential moves for the Kiwi?
Well, I think it's going to be, again, further softness. You're looking at the charts, and it's been one-way traffic over the last couple of months. You've got the consumer price inflation approaching their target range of 1 to 3%, Juliette. So that's a good sign. Some analysts are advocating, 50 basis points. I think that's probably where it's going to drop. And I wouldn't be surprised for that to happen with an additional 50 basis point cut on November 27, unless something substantial was going to change, the footprint of their economic situation. So softer for Kiwi versus US dollar, and that seems to be in a very big downtrend as demonstrated by the chart there. It's fallen off a cliff.
It has fallen off a cliff. All right, and a quick look as well in terms of what we've been seeing with some of the other currencies, the euro, the Swissy on your radar too.
Well, let's look at euro. I mean, against the US dollar, you've seen that, US dollar strength. So US dollars come under pressure, euros come under pressure, sitting in there at that 109.50 sort of handle. It had continual downdraft, and you're probably going to see, you've had inflation's in a good mood in the sense that it's in that target zone. So I feel as though that you're probably going to look at that 108 handle in the short run. And could it go lower? Let's just see how aggressive the Eurozone and as far as interest rate cuts are over the rest of the year, Juliette. And yes, 107, 108.50 is sort of where we've got to keep a very close line on.
And then the Swissy.
Well, what do you say? The Swiss franc, dropping interest rates, gold-backed currency, it's very volatile as seen in the chart there. It's a currency, and if you're looking at the indicators, it's still in a bearish sort of trend. So I'd have to say that it's probably, more movement and more volatility in the short run. There's probably better opportunities out there, but it's certainly a market that attracts many global traders because of the key inputs that impact that sort of market, being gold, being low interest rate environment, and of course the Eurozone timeline. They very much, it's a hot trading market that our traders participate in.
Yeah, it's always one to watch, particularly as we see so many risks out there. Peter, thank you so much. Peter McGuire from XM. That does it for this edition of The Trade. Be sure to join us again next time.